Welcome to our deep dive today. We're going to be looking at Emerald Finance Ltd. They're a non-deposit taking NBFC based in Chandigarh.
Interesting.
And they're doing a bunch of different things, retail and MSME lending. They also act as a loan origination platform for more than 40 other financial institutions.
Yeah, so they're kind of like a bridge between borrowers and lenders,
That's right.
But also doing their own lending on the side.
Exactly. And for this deep dive, we've got three sources. First, we've got the transcript from Emerald Finance Ltd's Q3 FY25 results conference call that was held on January 8th, 2025.
Right.
We also have their press release announcing those results, and then we've got their investor presentation. But the big thing that makes this deep dive so interesting is they're reporting a pretty significant jump in profits, 109% year on year
Whoa.
to reach 2.48 crore. And then for the first 9 months of FY25, their consolidated net profit more than doubled. It rose 108% to 6.25 crore.
Wow, those are some pretty impressive numbers, especially in the current economic climate.
Yeah, and the craziest thing is they're achieving this growth while still maintaining zero NPAs.
Oh, wow. That's really impressive.
It is. So it seems like they've got a really solid understanding of how to manage credit risk.
Yeah, which is obviously like a key thing when you're in the lending business, right?
Absolutely. And it seems like a big part of their success story is tied to this new product they're offering called Earn with Excellence, or EWA for short.
Okay, I've heard of this.
Yeah, so essentially what it does is it lets employees access their earned salary before payday.
Uh-huh. So it's
Well-
kind of like an alternative to those payday loans.
Yeah, exactly. It helps people kind of avoid that end-of-month cash crunch.
Yeah, that's smart. That's a really big market.
It is.
Especially when you think about how many people are living paycheck to paycheck.
Mm-hmm.
And it's not just for like low-income earners either.
Right.
It's for people across all income levels.
Yeah, and the fact that they're both the lender and the tech platform for EWA really gives them an edge, I think.
Yeah, absolutely. They've positioned themselves really well.
Especially in such a rapidly growing market. They said in the conference call that India's salary market is estimated at around INR 90 lakh crore per annum.
That's a huge market,
It's massive.
and they're just getting started.
Yeah, I mean, during the earnings call, Mr. Sanjay Agarwal, the managing director, he was super enthusiastic about EWA. He actually said, it's such a huge market, they're not even scratching the surface.
Yeah.
There are only 4 players right now in the Indian market. India, I think, has a $900 billion market, and we have not even scratched the surface right now.
He's not wrong. It's a huge opportunity.
Yeah, and it's actually a concept that's borrowed from similar products in the U.S. and Europe.
Oh, really?
So it's not totally
Yeah.
uncharted territory.
Yeah, but adapted it to the Indian context. That's the key.
Exactly.
And that's where their understanding of the local market comes in.
Yeah.
Combined with their technology.
Yeah.
That's what gives them an edge.
And they seem to be managing risk pretty effectively, too. Mr. Agarwal said, it's a fantastic business. We are operating at zero delinquency.
That's good to hear. But, past performance isn't always a guarantee of future results.
True.
It'll be interesting to see if they can keep that up as they expand their lending portfolio.
Yeah, it is a bit of a tightrope walk, isn't it? Like, you've got to balance these ambitions for growth with, prudent risk management.
So sure.
Especially when you consider their plans to expand into new lending areas.
And that's exactly what the investors were interested in during the earnings call. They were asking about the scalability of the EWA program and their plans to move into things like invoice discounting and MSME loans, and of course, their risk mitigation strategies.
Okay, so let's unpack that a bit. What exactly is invoice discounting, and how is it different from the current offerings in terms of risk?
So basically, invoice discounting allows businesses to borrow money against their unpaid invoices.
Oh, okay.
It's a way for them to get working capital.
Yeah.
That's tied up in these receivables.
Mm.
But it does introduce a different type of risk compared to something like EWA.
In what way?
Well, with EWA,
Okay.
you're dealing with salaried individuals, and their income is relatively predictable.
Right.
But with invoice discounting, you're relying on the creditworthiness
Huh.
of the business that's issuing the invoice
Okay.
and the ability of their customer to pay.
So there's a higher potential
You-
for default.
If either party has any problems.
I see. So Emerald would need a really good system for vetting both the businesses and their customers. That does add another layer of complexity. Did they talk about how they plan to handle that?
They did. Mr. Gurmeet Kaur,
Yep.
their chief risk advisor. She talked about using a multi-pronged approach.
Okay.
They want to combine traditional credit assessment methods
Yeah.
with modern technology, things like data analytics,
Mm-hmm.
maybe even AI.
It sounds like they're aware of the risks and they're taking steps to try to mitigate them. But,
Yeah.
at the end of the day, every lending business has some
Oh,
risk.
for sure.
And
It's all about striking a balance.
Right.
And that's what makes this so interesting. Emerald is really trying to do both. They want to grow quickly, but also maintain this strong risk management framework.
Well, Mr. Agarwal seemed pretty confident. He said, "It's very easy to earn money, but we don't want to take an undue risk. But of course, actions speak louder than words. So let's actually look at their risk management practices and see if they hold up."
Yeah.
Okay, so they're boasting this zero NPA record. How are they pulling that off?
Well, they're really going above and beyond the standard credit checks.
Like what?
Well, they've developed this algorithm. It incorporates traditional financial data, but also alternative data sources.
Oh, wow. Like what?
They're looking at social media activity, even things like psychometric analysis.
Wait, psychometric analysis? What is that? Like mind reading.
Not exactly haha, but it's definitely a way to get a better, more holistic view of a borrower's creditworthiness.
That's really interesting. So they're really using technology to get an advantage with
Yeah.
risk assessment.
Exactly.
But what about the human element? I mean, are they still doing that? Traditional relationship building.
Oh, absolutely. Ms. Kalsar actually talked about that in the call. She's the chief risk advisor, and she really emphasized the importance of that personal interaction, especially for the MSME and SME loans.
Interesting.
They always do face-to-face meetings with potential borrowers.
It's like that old school banking, but with a modern twist.
Exactly. It lets them assess the character and credibility,
Mm,
not just the numbers.
that makes sense.
Yeah.
But let's talk about their plans to expand into new lending products, like invoice discounting and the smaller personal loans. Aren't those a lot riskier than EWA?
Well, they can be, especially invoice discounting,
Right.
because you're essentially relying on the business
Yeah.
to be able to collect on its receivables.
Yeah.
And that adds a whole other layer of complexity to risk assessment.
You've got to factor in the creditworthiness of the borrower's customer, too.
Right.
It's like a chain reaction.
Yeah.
One weak link, and it all falls apart.
Yeah.
So how are they approaching invoice discounting then?
It's pretty interesting. They're not just looking at traditional financial statements. They're using things like GST filings, even bank statements.
To get a more accurate picture of the cash flow?
Yeah, exactly.
They're not messing around.
Nope. And they're also going to be leveraging their relationships with those 40 other financial institutions.
Oh, right. Because they act as a loan origination platform for them.
Exactly.
That's got to be valuable.
Yeah, it gives them access to a lot more data and expertise.
Okay, that makes sense. What about those small ticket personal loans? I always thought those were pretty high risk.
They can be,
Yeah.
but Emerald is taking a very targeted approach.
How so?
They're focusing on salaried individuals with a good borrowing history.
Okay, so they're being selective.
Yeah, they're not just giving money to anyone.
And they're using technology to make the process quicker.
Exactly. Their investor presentation actually mentioned plans to integrate with account aggregator.
Hold on. Account aggregator. What's that?
Oh, it's basically like a digital locker where you can keep all your financial info,
Right.
bank statements, credit card bills, investments, and you can choose which lenders can access that information.
So Emerald can just get the data straight from there.
Right. It just makes the whole process much faster and smoother.
And more transparent.
Yeah, it's a win-win.
Okay, I get it. So let's talk about their growth strategy now.
Oh, wait.
They laid out some pretty ambitious targets in their investor presentation.
Yeah, they did. They want 10,000 transacting customers by the end of FY25 and 50,000 by the end of FY26.
That's a lot of growth. How are they going to achieve that?
Well, they're investing a lot in technology. Their EWA program is already fully digital,
Yeah.
and they've built their own tech stack.
So they're not reliant on any third-party providers.
Nope, which gives them a lot of flexibility.
Yeah, that's a good move, especially in such a fast-paced industry.
Absolutely. And they're also looking at incorporating API banking.
Okay, what's that?
It basically lets different financial systems talk to each other.
So they're trying to build a more integrated financial ecosystem.
Exactly.
But what about the customer experience?
They're actually planning to launch a mobile app
Oh, cool.
so customers can do everything on their phone,
Makes sense.
apply for loans, track repayments, all that.
It's got to be convenient. That's what people want.
Absolutely.
Yeah.
And they're also looking at using chatbots and other AI tools to provide 24/7 customer support.
Wow. So they're really going all in on the digital side. But doesn't that increase the risk?
There's always some risk. But they're taking precautions, strong cybersecurity, and they're only working with reputable tech partners.
Okay, good. So they're not cutting corners.
No,
But technology is only one part of it. What about their team?
they're planning to expand their team, especially in risk management and tech. And they're invested in training and development for their employees.
So they're building a company that's tech savvy and people focused.
Yeah, it seems like they're doing everything right.
But the big question is, can they keep this up?
That's what we need to find out.
Can they keep growing while staying committed to responsible lending?
To answer that, we need to look closer at their financials.
Okay, let's do it. Okay, so let's take a look at those Q3 financials.
Right.
Their investor presentation shows a big jump in their loan book, especially in the MSME lending segment.
Interesting.
So it seems like they're doing pretty well with those smaller businesses.
Yeah, that makes sense. I mean, the government has been really pushing to support the MSME sector.
Right.
It's a huge market with tons of potential.
Yeah, and it looks like Emerald is really capitalizing on that.
It could really pay off for them.
But it's not all about growth, though. They've also maintained a really healthy net interest margin.
Yeah, that's impressive. It shows that they're managing their cost of funds really well.
And how are they doing that?
Well, in the conference call, they talked about diversifying their borrowing sources.
Okay.
So they're not just relying on traditional banks, they're also working with institutional investors.
Smart.
It gives them more flexibility. And they can get better interest rates.
So they're really playing the field. But what about their reliance on technology? I mean, it's great for efficiency, but it's got to be expensive.
Yeah, it's definitely a big investment up front.
And is it paying off?
Their Q3 results show a decrease in operating costs.
As a percentage of assets.
Right. So it seems like they are leveraging technology to streamline things.
And reduce those overhead costs.
Yeah.
So they're getting more bang for their buck. But what about the competition? There are a lot of other players in this market.
Yeah, fintech is super competitive right now.
So how is Emerald standing out?
I think it's their unique approach.
How so?
They're combining that traditional relationship-based lending
Yeah.
with the latest technology.
So it's like a hybrid model.
Exactly. They can cater to a broader range of customers,
I see.
people who want that personal touch,
Yeah.
and those who prefer the convenience of digital platforms.
It's the best of both worlds.
Yeah.
But the competition is fierce, though. There are a lot of fintech startups out there.
Oh, yeah, tons.
Yeah.
And they're all vying for the same customers.
So what does Emerald have going for it?
Well, first of all, they've got a great track record.
Mm-hmm.
That zero NPA record is a big deal.
For sure.
And they really understand the Indian market. They're not afraid to innovate either.
So they're ticking all the boxes, but can they really keep this up?
That's the big question.
Right.
It's a tough industry. Things are always changing.
Yeah, the regulations for NBFCs are always in flux.
And then you've got all these new technologies coming out. Blockchain.ai. It's disrupting everything.
And we can't forget about the global economic uncertainty.
Right.
There are a lot of potential challenges.
Definitely.
But it seems like Emerald is ready for them.
Yeah, I think so.
They're committed to responsible lending. They're using technology strategically. And they're building a strong team.
I think they're in it for the long haul.
Well, this has been a really fascinating look at Emerald Finance Ltd. It's clear that they're doing some really innovative things in the Indian financial sector. But as with any investment, it's important to do your own research.
Yeah.
Take a close look at their financials, their management team, and their overall strategy.
And don't forget, past performance doesn't guarantee future results.
Very true. The financial world is full of surprises.
That's for sure.
We hope this deep dive has given you some valuable insights into Emerald Finance Ltd. and the trends that are shaping the Indian fintech landscape. So until next time, keep exploring, keep learning,
And keep diving deep.